what's my responsibility if I want to co-sign on the loan for somebody else? I get that question a lot. Well, my name is Nicole Rueth with the Rueth team, and I want to go through those responsibilities and how you get out of it. But if you like this kind of video, make sure to hit the like button, subscribe, and hit the bell so you get notified whenever we put out more videos like this. So let's talk about that. If you want to co-sign for, say, a child or a parent, or you're deciding if both spouses want to go on the loan, or maybe you and a friend want to go in on an investment. We have a lot of those right now where people are pooling their funds and eligibility. So if I want to go in on a loan with somebody else, then I also have responsibility for that loan. That's important. So when two people go on a loan, let's just take a mother and son as an example, and they all work the same. So if the mother's not going to live in that home, but the son is, but she's willing to co-sign on the loan because he needs her income to qualify, then mother and son are equally 100% responsible for that loan. That loan is going to show up on both of their credit reports equally. And if that loan payment is not made, it's going to show up on both credit reports equally. Now, once the son has made 12 monthly payments, then it no longer counts against the debt to income ratio of the mom. Now, it's still going to show up on the credit report, so you still want to make sure that you're co-signing for somebody that you know and trust is going to make those payments on time. But if you want to qualify for your own home, you can do that after 12 successful on-time payments by the other person. Now, what if I want to get off, especially if it's, say, they're not a husband and wife and it's a fiance situation or boyfriend and girlfriend, and we want to purchase this home together. And maybe it didn't work out and they're no longer together, and now one of them wants to stay in the home and the other one wants to be removed from the loan so they can go off on their life and re-engage and buy another home. Makes sense. But how do I get off that first house? The only way to get off a loan is to refinance. You can't just sign a name off of a loan like you can off of a deed. So let's talk about that in just a second. But finishing the loan, the only way is to refinance. Now, when rates are low, it's okay. It doesn't really matter. But when rates go up, you might find that you're giving up a 2.75 interest rate for a 5.5% interest rate, depending on what the market is doing, because that other person wants to get off that loan right then. And of course, sharing the equity that we've gained over the last couple of years. Now, there is an alternative to just signing on the deed, meaning having ownership. This might be a consideration if you have two people who don't necessarily need to both be on the loan to qualify, and maybe they're not married, but they both want to have ownership. You can put somebody on the deed either at the time of closing or after, and then add or remove people from the ownership rights to that home without changing the loan, but that's separate. Well, I hope that helped. And if you have any other questions about that or you want to dive deeper, please give me a call. Again, Nicole Rueth with the Rueth team, and I'll talk to you soon.